Palmer, I would like to invite Paul Marshall, Counsel White and Case, to introduce our very special guest speaker.
Good afternoon, members and guests. Today we welcome Tom Palmer, only the 10th CEO in Newmont's 103-year history. Tom has a historical connection to Melbourne, having completed his high schooling here and then graduating from Melbourne University with a bachelor's degree in engineering, followed by a master's of engineering science. Tom's journey with Newmont began in 2014 when he joined as Managing Director, Indonesia. A year later, Indonesia was integrated with Newmont's Australian and New Zealand businesses, and Tom was appointed Managing Director, Asia Pacific. In 2016, Tom moved to Denver, where he was promoted to Chief Executive Officer, before being appointed CEO and joining Newmont's Board of Directors almost 5 years ago in October 2019. Tom has successfully led Newmont through two of the industry's most notable recent acquisitions, Goldcorp in 2019 and then Newcrest in November of last year. He's recognised for his leadership role in establishing the Nevada Gold Mines joint venture in 2019 and remains on the board of that joint venture. Prior to joining Newmont, Tom spent nearly 20 years at Rio Tinto, where he held leadership roles across most commodities, including iron ore, coal, aluminium and copper. In these roles, Tom gained extensive experience managing global teams and leading improvements in safety, profitability, sustainability and diversity and inclusion. His time at Rio Tinto culminated with his last role as Chief Operating Officer, Pilbara Mines at Rio Tinto Ore. Tom is a fourth-generation miner and was born in Broken Hill, as were his parents and grandparents. He spent most of his childhood in Cobar in New South Wales, where his father worked at the local CSA mine. Members and guests, would you please welcome Tom Palmer to the stage? Thank you.
Thanks, James. Well, Tom, both of our teams are nursing pretty big injury lists, so you might get a game if you hang around long enough.
Get on the plane to Adelaide, I'll be there tonight.
Absolutely.
Take Dusty's spot.
Take Dusty's spot. I can see you as a bit of a dusty fill-in. Tom, I guess the big news in your sector is the really impressive run-up we've had in the gold price in the last 12 months. I think the price is up 20%. And also notably, gold's decoupled from its usual relationship with US interest rates. There's lots of theories about why this is. Physical gold buying by central banks. Is there a bit of sort of doomsday prepping against inflation by some buyers? What is your team at Newmont and what do you sort of think's going on in the gold market at the moment?
Yeah, thanks, James. We think about gold price. Broadly, two factors at play. The structural elements that you talked about, US dollar, interest rates, inflation, is driving up, it's driving up gold price. And then you've got the short-term tactics at play. So lots of central bank buying, in particular China, that I think is underpinning the current gold price. Both are strong at the moment, and if you take a view on what might happen in both those fronts, it gives you you can form an opinion on what gold price might do. We're reasonably bullish on gold and the factors sitting behind both of those elements. The decoupling of gold equities from gold price, we believe, is an industry issue, and it's linked to the significant inflation post-COVID and Russia's invasion of Ukraine. You've seen the gold industry cost curve climb to $300 an ounce, and I think gold equities are in the doldrums because investors are saying, can gold companies generate the free cash flow necessary to run their business, to reinvest back in the business and to deliver returns? So I think you are seeing a fundamental shift in what's taking place in the gold market. So people are going to either gold itself, or ETFs. What we see in the Newmont story with the transaction we completed late last year is that we are transforming Newmont into a a gold and copper miner, but our gold will come out of essentially a portfolio after we've finished optimisation of 10 Tier 1 mines. That's over half of the large gold mines in the world. So for the first time in the gold industry, we have a business that has very long life gold operations, literally decades, make up our portfolio, some 6 to 7 million ounces that we can see out literally decades. So the opportunity for us is to manage those large operations well, to ensure that we are generating free cash flow through the price cycle and demonstrate to the investment community that we are a gold equity that is differentiated from the other gold companies.
So what are some of the things you need to do to get that message across? Is it about costs coming down a little bit? Is it about executing on some of the integration of Newcrest, for example?
Yeah, so major transformation acquiring Newcrest, one of the bigger transactions in the industry, let alone the gold industry. We set about this year delivering on our go-forward portfolio. So we've got 6 operations that we're held for divestment, and we're working through a process to divest those assets for fair value. So I think key for us is following through on that commitment to divest those 6 assets to get the commitment we had is $2 billion of cash that comes from those divestments, and then to use that cash to either pay down debt or buy back shares. So that's meeting that commitment this year is important in terms of the Newmont equity story. And the second one is starting to demonstrate the value we see out of the ongoing portfolio of Tier 1 operations. So we've set some markers this year in terms of costs and production. So hitting those marks each and every quarter, delivering on those commitments. And then we're reinvesting back in the business. We've got a big project in the Tanami, building a new mine in Ghana, and we're actually building 2 block caves at Cadia at the moment. So delivering on those projects over the next couple of years, that will bring on lower cost ounces and tonnes of copper, and that will bring our costs down. So it's delivering on our commitments over the next 6 to 12 months. We believe we'll start to see some flow into our stock.
Beyond that sort of longer term cost story of improved efficiency from your portfolio, are you starting to see any relief on the cost inflation that we've seen over the last few years?
Wouldn't say we're seeing relief. What we're seeing is what we predicted would happen this year in terms of costs. Largely, so half of our costs is labour.
Yep.
And we're largely seeing what we predicted for labour or materials and consumables or energy being in line with our estimates as we built our plans and then guide to the market. Last few years has had a lot more volatility. So we're certainly seeing some stability, but along with the rest of the industry, we're seeing a cost base that's $200 to $300 higher than it was before the pandemic.
And when you think about that over the long term, do you expect that to come down? That general cost base that the industry's got to deal with, does that come down over time, or is that the new normal that you need to work to?
I think for the gold industry, and as part of the question with the decoupling gold price to gold equities, is can the gold industry bring those costs down? And I think it will be a factor behind consolidation in the gold industry. There are too many players with a relatively short mine life, so you might have a year or two in the sun where you can deliver some decent returns, but can you sustain that over time? What we have the ability to do through reinvesting back in our business, which we're doing, is to bring that cost down. In fact, we project to bring it down. We're sitting up around the $1,400 now. We'll bring it down to about $1,150 an ounce over the next 3 or 4 years because of the reinvestment back in the business, bringing either new low-cost ounces on or moving into we're doing laybacks at the moment, so moving into areas of high grade in our mines. That will start to flow through. And then the other exciting thing for us is that we're producing about 150,000 tonnes of copper now. Our project pipeline is all copper. So how we then bring on that copper, which then starts to complement the gold that we're producing, will further strengthen our business.
Hold that copper thought. I do want to come back to that. It's obviously a hot issue at the moment. Just on the integration with Newcrest, how do you feel progress is going? Are there any surprises that you've found as you've got into the guts of that integration?
Yeah, no, it's going very well. We approached the Newcrest acquisition with a clear strategy. So it was part of it. In fact, we started it about 2 years ago. We went through an exercise where we understood who we were as a company. We understood the mega trends that are impacting on our world, and we formed a view on what we would do organically with our portfolio, and if we had the opportunity to do something inorganically, what would it look like? And there were 3 criteria for us. One was we believe that we can run large open pit or underground mines as well as or better than anybody else. If we could further consolidate in Australia, the United States and Canada, the top mining jurisdictions in the world, that would be of interest to us. And if we could increase our exposure to copper, that would be of interest to us. You rate and rank the gold industry. Newcrest was number 1 with daylight to the rest. We started a process of engaging, and we were fortunate enough over the last year or so for that to play out into a transformational transaction. We were then able to draw upon our experience of our acquisition of Goldcorp 5 years ago. So Goldcorp was 5 new operations into our Newmont operating model. Newcrest was 5 new operations into our Newmont operating model. So we had a lot of lessons learnt from 5 years ago, in fact a lot of muscle memory from that experience. There's enough time to have got through and out the other side of Goldcorp, but the memories were still relevant. So we have taken 5 Newcrest operations, and 2 were plugged into our existing Australian business. We stood up a new business in Papua New Guinea, and that's where Lihir sits, and we plugged the 2 Canadian operations into our existing North American business, and we put Newmont general managers in place on day 1 in each of those operations so that the Newmont expectations around safety, respect at work, the application of our full potential program were clearly understood and being followed through on each and every day. So that process of integration has gone very smoothly. In fact, we disbanded our integration team a couple of months ago, and we're just getting on running those operations as if they'd been in the Newmont portfolio for a number of years.
The integration has proved, the divestment of some of these assets has proved slightly trickier. Obviously, you've had some issues at Telfer with the tailings dams there. Can you talk a little bit about what's happening there? How is that situation resolving, and does it put you behind on that divestment journey? Yeah.
So I'll get to Telfer, but we've got 6 assets and 1 project that we've put up for divestment, and we call them assets held for divestment. So Telfer here in Australia, Chim, our mine in Ghana, and we've got Cripple Creek and Victor, Eleanor, Musselwhite and Porcupine, along with a coffee project in Canada and the United States. 3 separate parallel processes, slightly staggered, but all of those processes are progressing and progressing well, and quite excited about the level of interest in each of those assets. When it comes to Telfer, there's been some challenges with the tailings dams there. Now, tailings dams are not something that you take lightly. So when we identified some issues with those tailings facilities, as we take an approach, we are radically transparent with our workforce, radically transparent with the regulators, and anyone who's interested in that asset, radically transparent in terms of what the issue is and what we're doing to understand the issue and remediate the issue, which we are doing. And so any prospective acquirer of Telfer will have that transparency in terms of how to understand those tailings and what the remediation plan, and there is a pathway to remediate. And if through that process there needs to be any sort of Newmont technical support post any transaction, then that's certainly available. So we play the ball as it comes, and we address those issues, be transparent about it, and continue to work through that process.
And does it feel like you're getting on top of it?
Yeah, we understand what the process is.
Yeah.
Yeah. So it's we've got. I mean, one of the things that Newmont brings to the Newcrest assets, but our broader portfolio, is a very, very strong technical team. So we provide support across all of our managed operations around the world. So when you have an issue, in fact, the guy who runs our tailings group sitting here in the room today,
no
Mark Casper, sitting over there somewhere, very capable set of engineers who can quickly assess the problem, provide the support to the site, and then come up with the appropriate solutions to address the issue. And we understand the issue, we understand the pathway to remediate.
I mentioned the copper story before. It seems almost every second email that comes into my inbox is about AI, energy, copper. every analyst and their dog is trying to make this connection at the moment. I'm sure when you bought Newcrest, and this has been a part of the Newmont story, particularly over the last few years, when you see the move in the copper price that we've seen, I imagine, you could say, we expected this, but has the story developed in a way that is a bit of a surprise to you? Has the hype got ahead of the fundamentals at all?
The copper story has been quite remarkable. So we sat down very deliberately, as I mentioned a couple of years ago. Each year we'll do an annual strategy session with our board. And as we unpacked the world in which we're living, you look at the societal mega trends, you look at the technological mega trends, you look at the geopolitical mega trends, and clearly the world is decarbonising and is going to need copper. So that was a fundamental premise that led to us engaging with Newcrest a couple of years ago. At that time, it was largely driven by the energy transition and the amount of copper needed around renewables and other things. Quite remarkable now to look back over those couple of years and to see that move in AI that we didn't see 2 years ago, that is putting further demand on copper. And so that the whole value proposition that we had 2 years ago and the Newcrest transaction has strengthened our copper position. The world produces around 25 million tonnes of copper today, thereabouts. 10 years' time, you're going to need another 10 million tonnes of copper. Escondida is what, 1.5 million tonnes? That's a lot of copper that needs to come online. And we have sitting in our project pipeline some shovel-ready copper projects.
And given this sort of the demand story's compounded, I guess, since you bought Newcrest, is there more you can do to bring on any of that copper quicker, or you've just got to, in your words, play the ball?
The most important thing you do is be disciplined with capital allocation, and for us, it's about being clear. We've set ourselves, and we've got a substantial amount of money, but the order of $1.3 billion a year that we'll reinvest back in our business. And so the commitment we've made to our shareholders is that we'll be disciplined in terms of that reinvestment back in the business. So we have lining up behind, so we're building the shaft at Tanami in the Northern Territory, Ahafo North, a new mine in Ghana, the 2 block caves either side of the existing block cave at Cadia. They're both copper gold block caves. That is our focus for the next couple of 3 years. Then sitting behind that are the projects that will continue to take that money that we've got allocated each year to spend on reinvesting. So you've got Red Chris sitting there in British Columbia. We've got an existing mine, open pit mine, a mill, a camp, a tailings facility, and a known ore body, which we're already doing underground development work for. So it's nicely placed to be the next cab off the rank. But we need to make sure that we've got the support of the local First Nations, the Tautan, and that consent approval process is in line with that. And it's a block cave. All your capital goes up front. I know block caves well. I was 20 odd years ago, I was at Palabora commissioning the block cave there. I remember Lee Clifford visiting at times when we were 30,000 tonne mine doing 8,000 tonne a day. It was a very competent rock. So it's not for the faint-hearted, but you need to make sure that you know how much it's going to cost and how long it's going to take. So we're ensuring that's got the Newmont discipline around that project.
I mean, we think about the copper story, the demand's clear. Australia's got, I think, the 3rd largest copper reserves in the world. Are we going to get our fair share of this story? I mean, you think about how difficult it is to get a new mine up, particularly in Australia. The planning approvals seem to be stretching out a long time. Are you worried at all that we miss the boat or are slow to seize on this opportunity?
I think there's a real opportunity for Australia to participate in the energy transition and copper, but we need to get a wriggle on. And we need to make sure we've got the policy settings in place and look for opportunities to develop those copper deposits that we know exist in this country. Australia, I mean, I have the benefit of living and working around the world. There is no better mining community than the Australian mining community. Australians are everywhere around the world. It's the Australians that innovate. And the opportunity, the potential that Australia misses that opportunity because we can't get ourselves organised and have the policies to support development of the copper resources here would be a crying shame.
What policy settings do we need to tweak?
I think it's the whole suite of things. So can you ensure that you can enter into investment agreements that you can rely upon over? I mean, these copper mines, as they develop, will be decades long. So it's ensuring you've got those settings in place. Energy security, and ensuring you can get secure long-term energy, renewable energy at a good price. Industrial relations, can you have a workforce and a level of productivity out of these mines, these capital-intensive mines? So all of the standard things that come with developing operations, that you can get the permits done in a reasonable amount of time. All of those aspects of developing a mine, the capital will go. I was in Peru a couple of weeks ago. I mean, Peru is blessed with copper as well. In fact, where we were at Yanacocha is one of the great, in Cajamarca, it's one of the great copper districts of the world. That capital will go elsewhere if we don't get ourselves organised here in Australia.
Are there any policy settings you'd call out as problematic at the moment? I mean, the industry's worried about the IR changes. Approval times seem to be really weighing on things.
Nothing specific I'd call out, rather than the opportunity to sit down and work through how does this jurisdiction grasp the opportunity that can come with the resources that exist in this country. I would talk about the sort of the surprise over the last couple of years in terms of the growth in demand for copper coming on the back of AI. You're seeing, as we spend time in DC, you're seeing those conversations starting in Washington in terms of what do we need to do either domestically or internationally to develop copper. They're the conversations that need to be happening here. So it's broad-based.
You talked about your pipelines full of copper. Would you like some more? Is there something else you'd like to buy out there that appeals to add to the copper pipeline?
I'd say our project pipeline's the envy of the mining industry. So we've got Red Chris sitting there shovel ready. It's getting in line. Yanacocha sulfides. We've mined at Yanacocha in Peru for the last 30 years, produced 40 million ounces of gold. Sitting underneath all that oxide ore is another 40, 50 years of sulfide ore with gold and copper. Sitting alongside that's the Conga project. Just down the road is, which is not ours, Michikelai and Galeno. We've got Wafigolpu in Papua New Guinea. We've got Galore Creek, which is just up the road from Red Chris in British Columbia. Nueva Union in Chile and Norte Abierto in Chile. We've got 6 massive copper gold projects in our portfolio, plus 11 large managed operations. We've got a very full plate.
Fair enough. Were you surprised that having done 2 of the bigger M&A deals in mining in the last little while, obviously we've just come out of a period where the BHP Anglo deal fell over. Were you surprised to see that not get to the finish line, or maybe even not get to the starting line, depending on how you look at it?
I think underneath that, the potential transaction was the same copper story we're talking about. And so the world, you're going to continue to see the demand for copper either drive opportunities to where you can buy it or where you can build. And I don't think that's going to be the end of these tectonic plates shifting in the mining industry as the different companies look for how they identify, if you're doing your strategy work well, identifying which metals you want to have in your portfolio and how you realise that. Doing transactions is really hard work, so it's if I think about where we're successful with the Newcrest transaction, it plays out publicly, but you guys leaked it quite early on in the process.
Sorry.
There are many others that we exercise that muscle. We did a lot of due diligence as we built strategic relationships, did due diligence on different opportunities before Newcrest came along. Any well-run mining company will be continuing to understand their strategy, continue to challenge themselves and continue to build strategic relationships and continue to exercise those muscles.
You mentioned you expect to see more consolidation in gold, but you also said your target list had Newcrest first and Daylight second. What is that? What happens with the Daylight? Do we see more deals from others over the next few years as they seek to shift their portfolios around?
I think there's a risk that the gold industry there's a long tail of order of magnitude more publicly listed gold companies than any other commodity, and you add all those the market cap of all those companies up, including ourselves, and I think we end up 20% of the market cap of Apple. So there's a relevance issue there in terms of being access capital, and as we move on, as the world moves on. The energy transition and ultimately gets to net zero in whatever time frame that is, if you are going to be building and operating mines that are genuinely net zero, you're going to need to have life and a portfolio out in front of you that can underpin the investments that need to be made. So I think there's going to be a number of factors, whether it's access to capital or just simply participating in the energy transition, that's going to lead to consolidation in the gold industry.
We've seen this theory that came up around the BHP Anglo deal that basically it's so hard to build a mine that buying mines will be the preferred path. I mean, from what you've just said, you've got a lot of projects in your portfolio that you'd like to get on and build. Do you subscribe to that theory, or do you think it's horses for courses? How do you think about that buy versus build equation?
Yeah, we're going to need to build new mines. We're going to need to build new copper mines if we're going to fill that 10 million tonne gap, and that 10 million tonne, you go another 10 years, it gets bigger again. So simply buying is not going to solve the supply problem. So what will differentiate mining companies in the future will be the capability to build mines and the capability to form long-lasting strategic relationships, because a lot of these big copper mines will be joint ventures. So being able to establish those relationships for the long term and being able to build mines, mega projects, so multi-billion-dollar mines is going to be a key capability. We have a skill. We're building a brand new gold mine in Ghana at the moment, so we have a capability.
Yep.
We're looking to ensure, as we get ready to build our next wave of projects, we build out the capability to build these very large mines. And a lot of those projects I mentioned are joint venture partnerships, so it's about working with your joint venture partners. And some of our mines are brownfields, which makes it that much easier. But building a greenfield multi-billion-dollar project is hard work, and it's a core competency that will be required of any mining company going forward.
Now, Tom, of course, your headquarters are in Denver, so I imagine you've heard a little bit about this US presidential election at the end of the year. Is it as big news over there as it is here?
Yes, yes. It's, you can't turn on the radio or the television without. They love their politics in the United States. So there's plenty of discussion in the US about the election.
Do you have an early prediction, or are you too smart for that?
I think it'll be very similar to 4 years ago. I think it's been a very close run, where we obviously have a Biden 2.0 and a Trump 2.0 plan that we're developing. So we're working our way through that in terms of how we prepare for whichever way it goes. But the other thing we look at, when I get particularly now after the transaction we closed last year, we're a long life, multi-decade business. So we think about it in terms of it's a 4-year term and what might that mean for us, but we do that in the context of what the next decade or two looks like for us.
As you do your scenario planning for either a Trump or Biden 2.0 government, what are some of the things you're particularly thinking about in terms of mining? What are some of the things that miners here might need to consider about the other side of the election? How will the various administrations view critical minerals, I guess particularly copper from your perspective?
We don't think it'll be much different whoever wins the election. Copper is going to be a very important metal, and if you're a US listed company with a reasonable critical mass, you're mining gold and copper. We're operating in 9 countries around the world. One, I think we've got a role to play in terms of influencing US government policy, but 2, that may present opportunities for us in terms of how we can work with the US government to find ways to bring on the supply of that metal. So I think it's both an obligation and an opportunity.
And is the current administration supportive of your projects over there? Or what you can do to improve the...
Yeah, we're in an unusual position where we're domiciled, headquartered in Denver, but we've got a tiny little mine in Colorado that's one of the ones up for divestment. So our operations are all offshore. So our relationship with the US government is often around, and they provide great support, the US flag, in terms of the countries we're in and the role that the US plays in, and it's an important part of the jurisdictions we choose to go into. Great support from the US government in those jurisdictions. So I think going forward, as the copper story starts to play out, it's more the role we might be able to play together in terms of looking and working with the US government about where those opportunities might be able to come from.
Tom, we heard a little bit about your rich family history in mining, a fourth generation miner. Your dad was an industry legend, and so was three of your uncles. But I wanted to ask you about your daughter Emily, who's here today. She works for BHP. We've heard a lot in recent years about real problems with harassment and discrimination of women in parts of the mining sector. Has the industry done enough to address this? Is the progress there?
No, and I think, and I've lived my whole life in the mining industry, worked for over 30 years in the mining industry, and I think about the work we've done to improve safety in our mining industry. And I remember back where we didn't know what safety was when I started mining. It's again, I think about Lee Clifford will tell the story of being in a taxi, I think it was in London, Lee, when you heard about the Luzenac disaster. That really got Rio Tinto on our journey for understanding safety and really improving the workplace conditions. And for me, that's safety, and genuinely looking after safety of the people that work with you and for you is at the very core of the trust and the relationship you have in your workplace. We've done a lot of work there, but we still, in the mining industry, kill people at an unacceptable rate, including, unfortunately, our organisation. We've still got more work to do. Linked to that is the broader definition of a safe workplace, and having workplaces wherever we are in the world that are free of racism, of harassment, of intimidation, and bullying. We've got a long way to go, and it's quite sobering. We have, within Newmont, we have one case of abusive behaviour across our global business every day, and the pattern is the same no matter what society or culture you're in. So we have as an industry and we have as a company work to do on both a safe workplace and a respectful workplace. It was, when I think about the fundamental expectations we set for those 5 new operations that came into our business on November 6th last year, fatality risk management, respect at work, and our full potential continuous improvement program were those 3 expectations. It really comes home when you've got a daughter working in the mining industry. It's still heavily male dominated. Emily works underground every day at Olympic Dam, so she's in an environment that has hazards, and she's in an environment where there is the potential risk of inappropriate behaviour. So as an industry, we have a lot more work to do, and we need to be implementing change, setting expectations, following through on those expectations, and continuing to set the standard not only for our industry but a broader society.
Well said. We're celebrating today Orica's 150th anniversary. Newmont's got a lot of history. 1916 you were established, so you're not quite at 150 years, but you're getting towards there. What will Newmont look like in 100 years' time? Will it still exist? What form will it exist on? You can get this one as right or as wrong as you want, because none of us will be here to check your answer.
The transformational nature of the transaction we closed last year is that we can genuinely see out the next century, which is pretty exciting, and it's the opportunity then to put in place a whole bunch of initiatives that can allow us to position Newmont to take full advantage of that. So that's an exciting place to be. If I think about 100 years is a long time out, but if I think about say the 40 to 50 year time frame, we've done some backward-looking work as we think about how we want to position this organisation going forward. If you'd 40 years ago had a mining business that was 60% gold, 40% copper, you would have had returns today that were equivalent of a mining company with a third coking coal, a third iron ore and a third copper. So interesting to see how that's played out over that length of time. If we look forward at the next 40 or 50 years, a portfolio that's got maybe 60% gold and 40% copper, I think is going to deliver some handsome returns. So I think that's the opportunity for us to position the business to do that. We will look very different than what we look like today. We need to be much more diverse. Technology needs to come into our business. We're still using a lot of technology that we were using 40, 50 years ago. But I think that mix of gold and copper will be very much the parcel of a mining company 50 years from now.
Maybe the 6th or 7th generation of Palmers will be running Newmont as well. Tom, well done. You've got through the easy questions. Hedley's going to take you through the tough ones now. Thanks, James.
Ladies and gentlemen, will you just thank James and Tom before we flick to questions, please? Now to questions from the floor. These are completely ad lib, of course. So if you're asking a question, stick your hand up. Please wait for the microphone. Stand so we can see you, and then state your name and affiliation. And it is a question too, folks, not a statement. We've got one right here on the right-hand side. Tom?
Thank you, Tom, for that. My name's Michael Hudson from Southern Cross Gold. From a C grouper to an A grouper, welcome back to Melbourne, and a little bit of a Broken Hill inside word there. I was surprised to hear the talk in terms of, I thought I was coming to see the CEO of the world's largest gold company, but I think copper was mentioned 4 or 5 times more than gold. Where do you see, in terms of permitting, social licence, your conversations with government today around your copper mines and the critical metal aspect, which is an easy argument, versus digging a big hole in the ground for lower grade deposits, bigger footprints for gold only deposits, and where does that, is there a difference? And if so, where does that exist right through that social licensing framework?
Thanks for the question. Clearly part of our strategy is to increase our exposure to copper, and what's in our project pipeline is a copper gold project. So that's an inevitable process of our organic pipeline for us. So our conversations as we think about the jurisdictions where we have those projects is very much how we bring on those copper gold or gold copper projects, and what support do we need, whether that's up in British Columbia or in Peru or in Papua New Guinea, which are the 3 projects that are lined up as the next in our line. When we think about gold mines, Newmont's purpose is to create value and improve lives through responsible, sustainable mining. In the various communities where we operate around the world, our gold mines have significantly improved the lives of the communities in which we live and work. And if we're doing our work well, long after that mine's gone, those communities will have the opportunity to have a better life than if that mine hadn't come along. And in many of the jurisdictions we're in, that's the important discussion that you're having. And then it's about how you steward that mine to ensure if it's an open pit or underground, that you're managing that well, that you've got closure plans, that you're making commitment to close those mines well, to rehab those mines. But improving lives in those locations is a really fundamental part of the work we do. And gold mining is an important part of lifting the standard of living around the world.
Tom, I think the second question comes from just over here.
Thank you, Tom. Well spoken today. My questions kind of follow... Oh, sorry. I'm Blaney Morgan. I'm from SW Accountants and Advisors. My questions are kind of follow on from there, where you're talking about the custodianship of your mines around the world. How do you look at investing across the developing economies compared to the developed economies? And I guess you talked a bit today about how there's volatility involved with Trump and Biden and things like that, even in the developed economies. But I'd just appreciate hearing a bit more about your insights in that area.
Yeah, thank you. So a clear part of our strategy is where we choose to operate matters. So an important part of the strategy that sat behind the acquisition of Newcrest was to build a really robust foundation of operations that are in the United States, Canada and Australia. off that solid foundation, you can then take some risk in some jurisdictions that are more in the developing world. So we're in Ghana, we're in Suriname, Peru, Mexico, Argentina. So it's about having that balance between where you're operating, so you can balance in some of the more riskier jurisdictions with a really solid foundation in the US, Canada and Australia. So that's a very important part of our strategy. We're also very clear which jurisdictions we will work in and we won't work in. And we have what we'll say in the investment world is it's A and B rated by each of Moody's, S&P and Fitch, which has sitting underneath it some confidence in terms of those locations. So where we choose to operate matters, and having a really robust foundation in a jurisdiction like Australia allows us to balance that risk out in some different jurisdictions around the world.
Tom, just right-hand side here in front. I don't think this person needs any introduction. Be a good question.
Gottliebson, the Australian newspaper. You set out very clearly where the copper buying would come from in the next 5, 10, 20 years. Where will the gold buying come from?
Yeah, thanks, Robert. I think we're going to continue to see central bank buying, as I think was one of the key things driving the gold price at the moment. So I think you'll continue to see that. You're going to continue to see a growing middle class in India and China. That is going to also underpin the buying of gold. We've been quite astounded. If I'm remembering correctly, it's each month Costco in the US is selling gold ingots, and they are walking off the shelves in a matter of days. I can't remember it's a significant amount of money per month that people are buying gold to have at home. I don't think we're going to see, in terms of when we think about the mega trends and the sort of volatility in the world we're living in, I think we're going to continue to see some of that domestic buying. So I think you're going to see those factors at play over that same time frame. I'm of the view, or we're of the view at Newmont, that gold has had a role to play in society since the dawn of time, and it will continue to play a role 100 years from now, James.
There'll still be a gold miner in 100 years. Heard it here first. I think we've got time for one more question from the floor, Tom, and it's right up the back.
Thank you, Tom. This is Ravi from MEMCO. I'm a metallurgist. I just want to ask you one thing. You mentioned about driving the all-in sustaining cost from $1,400 down to $1,150. And on the other hand, you have a big investment plan with the Tier 1 projects, including decarbonization. So do you link the decarbonization as a way or one of the investment way to reduce that AISC cost, or is it going to increase that cost over the period of time? Thank you.
Yeah, thanks, Ravi. It varies around the world. So a number of parts of the world that we're in, we already have access to hydropower, so we already have the energy covered in terms of electricity coming from hydro. What we're finding in parts of the world, including here in Australia, is certainly the path to decarbonise, which we're looking to do. We're also seeing the importance of energy security, and so we are looking to enter into power purchase agreements built around renewables that give us energy security, and they're getting to be quite competitive in terms of more traditional forms of electricity and what you can get now in some of those long-term agreements. So if you've got mines with long life, you can enter into some robust power purchase agreements. You get energy security as well as supporting the transition to renewable energies and bringing your greenhouse gases down ultimately to net zero. So it's a bit horses for courses, but it's energy security, again, I'd say in the last couple of years has become as equal with just the journey to decarbonise.
Folks, Tom, we might cut the questions from the floor at that point. There's always a few more, and Tom, being an old Monash University person, we've got a table which is at least half full of Monash students, so I'll take you down there and introduce you in a moment if you'd like. I'm sure they'll be full of questions which they won't want to say through a microphone. Just before I invite Andrew Hall from AMC to the stage, I'd like to acknowledge the Minerals Council of Australia's important role promoting and educating the broader public about the benefits of minerals and mining. Their popular 30 Things publication has now reached 30,000 copies, which is a remarkable effort. And today, Tom Palmer has a brief acknowledgement of MCA's newest publication. Tom, please, over to you.
Guess there's no such thing as a free lunch, is there? So we're launching a booklet. It's called Golden, the Rise of Industrial Gold, and I guess no better place to do that than here in Melbourne, a city that's really built on the gold that came out of Ballarat and Bendigo. Those of us, I think, in this room clearly understand the necessary role that minerals play in our modern way of life. However, we also know that society as a whole is less aware of its deeply rooted dependency on those same minerals. One of the things that we spend a lot of time talking about as a mining industry, whether it's the Minerals Council of Australia, I spend time as a member of the World Gold Council or the International Council of Mines and Metals, is the work we need to do around advocacy to ensure that the minerals that we produce and the role that we play in our host communities is as important to the broader mining conversation as many of the other themes that we've talked about today. And a couple of the questions I got covered that. There's more work for us to do as an industry to ensure that society in general understands the role that we must play in this energy transition. So that's why I'm very proud to be able to launch the Mineral Council's newest publication, Golden, the Rise of Industrial Gold. It's an informative and at times entertaining read, and it showcases the critical role of gold beyond its traditional uses as a store of value and jewellery. It covers its applications in terms of the high-tech electronics, its application in terms of advanced medicine, and the growing field of industrial nanotechnology. It looks into the impact of gold across modern and emerging industries, as well as its ongoing contribution to the Australian economy with its export revenue, the royalties that we pay, and the jobs that we provide across this country. The Minerals Council of Australia plays a really important role in promoting and educating the broader public around the benefits of minerals and mining. And from my perspective at Newmont, it is a benchmark when I think about the different jurisdictions that we work in terms of the work that the Minerals Council do in this country and where we could do such a better job in many other locations around the world. So for gold miners today and for the mining community more generally, I encourage you to pick up a copy of Golden. I think there are a few copies here, Tanya. To share that with your workforce, to distribute it in your communities. I think it's going to get out into schools, so it becomes part of hopefully the curriculum for kids at school. And I'd urge you to each of you to play your role in advocating for gold and for the mining industry more broadly. So thank you very much, and please ensure you get a copy of that new publication. Thank you.
Thank you, Tom. Copies of this new and important publication are available on your way out today, so you can collect one if you'd like, and if you miss out, they'll be available on the MCA website. I'd like to introduce Andrew Hall, CEO, AMC Consultants, to deliver the vote of thanks and to give a little something to our two speakers on the stage today. Thank you, Andrew.
Thank you, Hedley, and good afternoon, everyone. It's my pleasure to offer the formal vote of thanks to Tom, who provided us with great insight into how the global megatrends of societal transformation, technological change, and geopolitical turbulence are impacting our industry now and will continue to do so well into the future. Also of great interest was the integration of Newcrest into the world's leading gold miner with a strong appetite for copper. What's driving the gold price and how Australia can make the most of booming copper demand by getting a wriggle on. On a personal note, it was great to hear of Tom's long family history in Australian mining, which continues into the next generation. And well done, James, for facilitating a wide-reaching and on-point interview. On behalf of the Melbourne Mining Club and everyone here, I wish Tom every success as he continues to lead Newmont from strength to strength. Could everyone please join me in extending a very warm thank you to Tom by showing your appreciation in the usual way. Thanks, Tom.
Who would have thought, hey? It always comes out of the bag with a great deal of surprise. Thank you, Tom. Thank you, James. Wonderful presentation and discussion.